You had $15,728 in an account that said, right there on the screen, FDIC insured. Today, the bank says it's holding 93 cents of it. Nobody hacked it. No bank collapsed. The money didn't crash in a market. It's just gone, frozen somewhere between an app you trusted and a bank you never actually saw. This isn't a theory. It's a federal bankruptcy case, and the person counting the missing money is a former chair of the FDIC herself. She told the court, on the record, that finding all of it may be impossible. So here's the question we'll climb through, step by step. When an app says your money is safe, like a bank, who is actually holding it? And have you ever once seen them? Meet Mike. He did everything right. He didn't gamble. He found a savings app with a clean design, a high interest rate, and a little badge that said his deposits were FDIC insured, the same 3 letters printed on the door of every real bank in America. The app made saving feel easy, even fun. So he moved his savings in. Why wouldn't he? It said insured. Mike wasn't alone. More than 100,000 people did the same thing across dozens of these apps. And in May of 2024, all at once, their accounts froze. Over $200 million locked. No bank had failed. So who froze it? To answer that, you have to meet the company you never knew was standing between you and your money. The app on your phone usually isn't a bank. It's a front end. Behind it sits a middleman, financial plumbing, whose job is to connect the app to a real FDIC-insured bank in the background. In this story, that middleman was a company called Synapse. You never downloaded it. You never signed up for it. But every dollar you deposited had to cross its bridge to reach the bank. And here's the part almost nobody understands. Your money didn't sit in an account with your name on it. It went into one giant pooled account, labeled for benefit of customers. One account, thousands of people's money mixed together. The bank saw a single big balance. It did not see you. It trusted the middleman to keep the list of who owned what. So the only record that you owned that $15,000 lived on the middleman's computers. Think about what that means. The safety you were promised depended entirely on one company's bookkeeping being perfect. As long as the list was right, it worked. The question nobody asked was simple. What happens if the list is wrong? On April 22, 2024, Synapse filed for bankruptcy. And as it went down, it cut its partner bank off from the very system that tracked who owned what. The bank, suddenly blind, did the only thing it could to protect itself. It froze everything. That's the moment Mike's app stopped opening. Not because he did anything, because the bridge collapsed with the map still on it. A federal court took over. It appointed a trustee to untangle the mess. And not just anyone. They appointed Jelena McWilliams, a former chair of the FDIC. Picture that. The very kind of official who's supposed to guarantee deposits, now hired to go find them. And when she opened the books, the records didn't match. What the ledgers said customers were owed, and what was actually sitting in the banks, were 2 different numbers. The gap between them was somewhere between $65 and $95 million. Money that, on paper, belonged to real people. Money that, in reality, no one could find. Hold that number. We'll come back to it. Now the obvious question. The banks were FDIC insured, so why didn't the insurance just pay everyone back? Here's the trap. The whole episode in one sentence. FDIC insurance does exactly one thing. It protects you when a bank fails. That's it. But in this story, no bank failed. The company that failed, the middleman, was never a bank and was never insured. So the safety net everyone trusted was real. It just covered an event that never happened. Picture two men with the same $20,000. Mike kept his in a sleek app with a high rate. Dave kept his in a boring local bank down the street. Lower rate, nothing exciting. For years, Mike looked smarter. Then the freeze hit. Mike's $20,000 is locked in a bankruptcy case. Dave's $20,000 is exactly where he left it. The difference wasn't intelligence. It was an invisible layer Mike never knew he was trusting. This is how a man can have $15,700 on his screen and a bank that says it holds 93 cents. Both numbers are true. One lived on the middleman's broken list. The other is what survived the crossing. The badge never lied about the bank. It just never mentioned the bridge. After it happened, the regulators reached for the file. In September 2024, the FDIC proposed a new rule. Banks holding these pooled accounts must keep their own accurate record of every single owner reconciled every business day. In other words, never again trust the middleman's list blindly. It was the right fix. But read the status carefully. As of now, it is still only a proposal. The banking industry pushed back and asked the FDIC to withdraw it. The gap that swallowed Mike's money is, on paper, still open. There was one more document. A consumer agency stepped in and set aside $46 million to help the victims. Read that next to the shortfall. Up to 95 million missing, 46 million offered. Even in the best case, the math doesn't close. For a lot of these people, made whole was never on the table. So let's answer the question we started with. Where is the money? Trace it across the bridge, your app, to the middleman, to a pooled account, to the bank. Somewhere on that crossing, the record stopped matching reality by as much as $95 million. And the woman the court hired to find it, a former head of the FDIC, said plainly, it may never be fully recovered. Bring it back to the people. One man sold his house and put $280,000, his whole life, into one of these apps. Another watched $15,000 become 93 cents. They weren't reckless. They read the badge. They believed the 3 letters. And one of them said something afterward that should stay with you. I thought that FDIC meant something. It does mean something, but only at the bank, and only when the bank fails. It says nothing about the bridge in between, or the company keeping the list. So the next time an app tells you your money is as safe as a bank, ask the one question almost nobody asks. Who is actually holding it right now? And have you ever seen the list with your name on it? Because the badge protects a bank. It was never protecting you.